Hey guys, welcome back. In today's video, we are talking about the record box office, the short margin call, how funds are trapped, and many more in this video. Firstly, we're taking a look at this. Historical Thanksgiving 5-day domestic box office numbers by year. So if you're taking a look right now for the 2024 Thanksgiving 5-day, you can see the top 10 grossing is $415 million. The overall gross coming in at $417 million. Now, the important factor here is firstly, you take a look at the comparison of post-COVID, and what we can see is, of course, doing better numbers than every single year. So obviously, 2020, 19 million, and then 137, 128, 163. So we are better than, of course, we have recovered from this COVID. But now let's take a look at pre-COVID, so 2019 and anywhere below that, and you can see all the way from 2019 to 2012, there has been no Thanksgiving box office number where it's even gotten close to where we are right now. So this is a very clear indication of not only the recovery of box office, but actually the progression and how we've broken even further, how we're seeing bigger numbers. And now, like we said, the box office we're seeing right now, not all 415 million is obviously going to AMC, but a large proportion is. And the bigger the box office number, the better AMC will do. And that's what we are witnessing right now. And again, this is a reflection of what's more to come. And the very fact we could get this on Thanksgiving, we're very likely to get this throughout the rest of the year as well. So going into 2026, we're definitely going to be looking at extremely good fundamentals from AMC. And you have to remember, just letting you know now, AMC will continue to gain more as better movies roll out. Apes and the public are making movies at AMC great again. And just like we talked about in terms of the indications that we're seeing here, we're only going to see this number get bigger. And the bigger the box office number is, the better the fundamentals for AMC. And that's what we are going to be witnessing. And it's exactly like we talked about, why we're seeing these negative articles, while we're seeing the shorts panic. If you see here, reposting my DD from 3 years ago, as true now as it was then. Short sellers have only two ways out: to bankrupt AMC, which isn't going to happen, or two, to literally outlast us like a season of Survivor. Hold on to the short as a margin call. It really is that simple. So one of the biggest things we talked about, and you can see here, Citadel noticed fate it sealed. AMC apes are committed to sell higher price limit, 10 to 100k, which will effectively bankrupt Citadel. Now, like we talked about, they only have two ways out. Firstly, to bankrupt AMC. And this is why you see the constant manipulation, the constant suppression, the constant negative articles, because they're trying their best to get people to sell their AMC shares so that they can't raise, of course, money, so that they can't pay off the debt, and the fact that they obviously don't want the price to go up. And so that's what they want to do, or again, to outlast us. So firstly, let's talk about bankruptcy. Now, just like we've seen here, with the box office number going up, AMC is going to be seeing better fundamentals. When AMC is seeing better fundamentals, they're going to make more money. And by making more money, firstly, it allows them to survive. Secondly, it gives them more money to pay off debt. And that's, again, another factor of how they're going to survive. The next thing is to outlast us. So not only do they have to outlast AMC, they also have to outlast the retail investors. Now, in this case, this is actually even harder than trying to outlast AMC. And the reason why I say that is because for anyone buying into their AMC shares, it costs nothing but the shares that you bought. Every day you hold on to this share, it doesn't cost you a single dime. And if we ever get to that point where AMC is actually issuing dividends, then not only do we not have to pay, but we're getting paid to, of course, hold AMC shares, which is going to come from the short sellers. And that leads to my next point of talking about why they can't outlast us. Because every single day, they are spending more money to try and create synthetics in order to actively suppress the price of AMC, but they also have to continuously finance their existing short positions. So you can see how this goes into a cycle of spending money to short AMC and then spending money to keep the shorts that they previously took the positions upon. And so they're spending money every single day, whilst we don't have to spend a single dollar to obviously hold on to shares of AMC. And like we talked about with the earlier point, when we do see AMC issue out dividends, remember, the ones that are shorting AMC are actually the ones that are responsible for paying the dividends. So then not only are we getting them to pay for creating shorts, for financing shorts, but we'll actually also get to them to pay, of course, for the dividends for us retail investors. And that's why we talked about in terms of how they can't outlast us. And you can see how it started and how it's going for AMC short sellers. They still push their fantasies narrative, begging us to sell shares, but it seems increasingly desperate. Some hedge funds are still trapped and over-leveraged. Even a small price move up moves against them, they are beat. And so we can see in terms of how they're trying to, of course, use these negative narratives to get people to sell, etc., etc. Like we talked about, we've always seen this. You can even see the recent article, Jim Cramer begs you to sell your AMC at $6. Now, when you see, and again, this is what we talked about, the false narrative, who to trust, large institutions buying into AMC like crazy, or anonymous accounts on X and fuzz spreading media being blatantly and provably wrong every time they predict AMC's demise. So we can see all of these narratives telling you to sell your AMC shares, all of the media, etc., etc. But what we can see is that actually the institutional ownership is actually going up. And this is a point that we've always talked about on this channel. They are continuously buying into AMC. Now, as always, none of this is financial advice to do so with a grain of salt. We should do own due diligence and research. But it's important to understand that whilst you're seeing all of these articles telling you to stay away from AMC, telling you to sell your AMC shares if you have any, that the institutions are actually buying in. And you can actually even see this. What we can see is a reflection of the AMC price and AMC ownership. And as you see the AMC price drop, the ownership is actually going up. So they understand that the lower the value of AMC is right now, the better of an investment it is. And hence why we're seeing as the price goes down, people are buying in, or in this case, more importantly, it's institutions. Remember, if institutions see the price of AMC go down and they deemed it is a bad investment, they would be selling their shares. So a graph that you actually would be looking at is as the price of AMC is going down, so is the institutional ownership. But the very fact it's going down in terms of price, but the ownership is going up, should show you how much of an investment they truly think AMC is. And so remember that AMC and GME have 45,000 times the fail to deliver of Amazon. How is that possible? And so we can see, firstly, we have an FTD problem at the DTCC, how they have over $6 trillion in US Treasury settlement failures at the DTCC. So firstly, this is a case of illiquidity, and this is something we've talked about in terms of what will cause the squeeze. When we see a illiquidity issue, it means that we're seeing whether it's the banks, we're seeing whether it's the hedge funds, the institutions, they are all lacking money, hence why we're seeing a settlement failure. So that's the first case. The second case is understanding that we are seeing the AMC and GME FTDs. And that itself shows the lack of real shares. And this is why we can see this point as well. How many extra AMC floats are there? Recent polling confirms 9 extra AMC floats using conservative assumptions. It's an infinity squeeze setup. Short selling market makers and hedge funds will be liquidated trying to buy back 9 extra floats with retail holding shares that they need. Now, this is obviously with a poll, so there's not enough data, or at least accurate data. And we've seen in the past, the float can go anywhere from a very minimum, a very conservative of 9, all the way up to 40 and even 100 times the float there actually is. Because we've constantly seen people actually buying into AMC. We're seeing how even small populated countries like Sweden are able to actually buy up their entire float. And that's only with one nation who aren't heavily invested in US stocks. So when we account for the actual US market, you can see how the number goes up even higher. But we know that at the very least that the float has been bought many times over. And this is what we talked about in terms of the infinity squeeze setup and how short hedge funds will always be liquidated. It's a clear indication in terms of why they're afraid, why they constantly need to suppress AMC, because they're worried about what will happen if they don't, as they buy up the millions and billions of shares that they have created. And you can see what we talked about, Jim Cramer on AMC, if it gets to 6, I want you to sell it. Now, like we talked about, there's many things to be looking at here. Firstly, the reverse Jim Cramer. Secondly, again, media telling you to sell. And thirdly, why would media tell you to sell if they weren't afraid? And just like we talked about here, because they are worried about having to buy up 9, 10, 40, 100 times the float of AMC. And that's what they are worried about. Another thing we can look at is GME, the 2 hours getting close to a cross, and we all know how far we've come since the 1 hour cross. So another technical factor for how obviously AMC is improving, and that itself is obviously a very good thing for us. Like we talked about, the technical indicators is very, very important. It allows us to see the sentiment. It won't necessarily indicate that we will see a breakout immediately, but by understanding the price action and the sentiment, we know how investors are feeling for AMC and GME. And you guys, thanks for watching. I'll catch you guys next time.